Corporation. I've come here from Chicago, inshallah, to spend this evening with you and spend some time talking about the program. I have been in the field of Islamic financing for the last 18 years. Before that, first 7 years, I've worked on Wall Street with investment banks like UBS and Morgan Stanley. So for the last 25 years, I've spent my time in the area of investments and Islamic financing. I have seen it and experienced Islamic financing from all sides. Not only do I get to come out and speak with and talk to community members like yourself, but I also deal with regulators, investors, the Sharia board. So I have access, alhamdulillah, to all different parties. So I'm here tonight to mostly answer your questions, cover a little bit about some of the main topics. How is Islamic financing? Umar touched upon that. How is Islamic financing different than compared to traditional lending? I'm going to touch upon that. Why UIF is the #1 rated company. There are other options available, I know, in Islamic financing, but why are we rated #1 and what makes us different, what makes us stand out? I'm going to talk about that. I'm going to also talk about the home buying process, how if you're looking to buy a home, inshallah, what are some things we look for, not just us, but also any bank and so forth, what do they look for? So rather than figuring it out afterwards, our goal is to hopefully educate you so you know beforehand that how to prepare best to buy and some of the issues that can slow down the process or stop the process, we want to address them right now, inshallah, so then in the future your transaction goes very smoothly. So the idea here is to just keep it very educational, and I'll do about half hour worth of comments, and then after that, inshallah, you're welcome to leave or welcome for Q&A session, inshallah. I want to introduce some key people who made this event happen. First and foremost, I want to thank the Islamic Center of Irving, ICI leadership, for allowing us to come do the presentation. I truly appreciate the board members and administrative group who allowed us to do that. So Jazakallah khair, thank you so much. It's our pleasure to be here. I also want to introduce, you already had a chance to hear from Umar Subhani. Umar is our regional manager. And Umar, you can take your mask down and just show your face a little bit if you don't mind. So people recognize you on the street. I don't want it to be like they don't know who you are afterwards. So Umar is our regional manager. He runs the Texas office for us and southern region for us from our Plano. Our offices are right across from the Epic Masjid in Plano. So as soon as you walk out, you'll see our big logo, UIF. So that's one. And then also I want to thank Brother Ahmed, if you can stand up and just take out. So Ahmed is, mashallah, the representative who helped arrange this. He's the person today you will be calling at the end of the night. If you have any questions, you want to move next level, I'll have Ahmed's information at the top at the end. But before you leave, if you have to leave early, please take his card on the way. His card is also on the outside on the way out by the door over there. So, but Ahmed will be the one helping you, inshallah. So I want to introduce them. So I want to go ahead and get going. A little bit about, I talked about my background a little bit. Umar, is this working now or? All right. So that's when I was younger, looked better back then, so disregard that picture for right now. Focus has to be on my background. Mashallah, I've been blessed. I started my career when I was 20 years old as an entrepreneur. I started up a few businesses in Chicago, a marketing company, a health care agency, a travel industry agency, and so forth. And I was doing extremely well when investment career came calling. That's when I said I went to UBS, Morgan Stanley. Then actually I joined a company called Guidance. You may have heard of that. I used to be vice president for Guidance for almost 7 years. And then I left them to join UIF. So I'm very familiar with the industry landscape as well. And then now I've been with UIF for the last 11 years. So that's a little bit of my background. UIF as a company, Omar, can you flip the laptop so I don't have to keep looking up to see what's screen behind me? So usually I have the laptop right in front of me so I can kind of see what screen on there. Yeah. If you can flip it around so at least I can see on that screen what slide is there. Yeah, because I've done these presentations over 500 times. I've done this maybe like 1,000 times at different masajids all across America. So I virtually can do this presentation in my sleep, but I know what slides are coming up, inshallah. So UIF background, UIF is not new. We've been doing this since almost 2005. It's a company based out of Michigan, and it's a private company. And we, alhamdulillah, have done close to 4 billion in home financing already. Last year was our biggest year. We did about $1 billion with a B of home financing. We also are the largest players in masjid financing, commercial real estate financing. And now, with Allah's blessings and the community support, we're trying to launch new programs, auto financing, because our goal eventually is to offer our Muslim community many different non-riba based programs, whether it's auto financing, Islamic credit cards, Islamic real estate options. So we're a company with big dreams, but because of COVID, things slowed us down, but inshallah, we want to be back on track and do well. So UIF has been around for a while. We've been doing this successfully for a while, and I'll show you a slide later on why we're a #1 rated company in the US. So I want to put this slide up just so you have some sense of what states we do business in. You don't have to memorize this, but alphabetically laid. We're not in every state. Every state to open costs a lot of money. We basically do one state at a time, maybe 2, 3 states in a year maximum. But we are in all the major states where Muslims are there in higher population. Obviously, we're not going to be currently in Nebraska or Vermont. There's not a very big Muslim community, and it costs us a lot of money to open each state, because we have to independently go to each state, get our program, Islamic product approved, our contract approved at the local state level. And then after that, we still have to deal with title companies and other people. So it's a pretty expensive proposition. So we usually pick 1 or 2 states every year to open. So alphabetically speaking, those are the states we are in. Obviously, Texas, we are doing business. That's why I'm here. And inshallah, very soon, South Carolina and Alabama, our next ones, inshallah, we're going to be opening up. So we're now opening second-tier states. We opened the first-tier states first, where populations are big. Illinois, California, Texas, those were open in the first round, and now we're opening the next level states where Muslim populations are a little bit lesser than the big states. I'm going to quickly talk about the basis, the fundamental basis of Islamic financing, what it's based on. Because once you understand that, everything else becomes, your mind becomes very clear about the choices you have. I remember, people ask me, Islamic financing, did it just start 10, 15? No. Islamic financing has been going on in this country for the last 30 plus years. Many, many years ago, there were groups like ISNA and other cooperatives that would start an Islamic financing program under the partnership model or the rent-to-own model or lease-to-own model. The challenge used to be the money. Because in real estate, even if you have 5 million, 10 million, that's not a lot of money, because you literally go through that money very fast. We right now currently are doing anywhere between 70 to 100 million a month. We cannot raise money fast enough, and then we cannot sit on the money for 30 years while people pay us. So these groups that started 30 years ago, they would get together, 10 people, they'd all put in 100, 200,000. They will finance maybe 5 to 7 homes, and their money is done. And now they have to wait when people make their payments, and then when they have enough payments in, then they'll buy the next house, basically. So that model did not work because it's not a scalable model, because community wants to buy a house today. If you come to me and you say, I want to buy a house, I tell you, well, start putting money into this bucket, and your turn to buy a house will come 5 years from now, 7 years from now. That's not a scalable model. So something changed in early 2000s, where the US government agencies, Freddie Mac, Fannie Mae, they decided that they will start buying Islamic contracts. Before, they would only buy loans from regular banks, but these government entities said, you know what, we will buy, actually it was Freddie Mac is the company, and I'm going to cover that as part of my Q&A, how do we raise money, where our money comes from and stuff. So something changed in early 2000s when the government entities for the first time said, we will buy Islamic contracts. We're buying loans from regular banks, but we will also buy your Islamic contract. And that changed, because once we got access to that capital, it made a big difference, because we have initial capital of 30 million. We've already raised from the community. We have that money already. We have that capital to use to buy the house immediately along with you in a partnership. And I'll talk about the partnership structure. But once we have a share in the house, once we own a piece of house, we have to sell this piece of house to somebody else so we can get some of that money back, so then we can help the next person buy the house. So made Islamic financing a reality in this country when government entities said, you know what, we are going to buy Islamic contracts. And it started with Freddie Mac. There was a Muslim brother who was very high up in Freddie Mac. He played a very big role, actually, in helping Islamic financing be a reality. I remember back then, I was starting my career back then, so he basically went to the Freddie Mac and said, listen, you're already buying loans from regular banks. These are actually better customers. Muslims will make better customers because their credits are going to be good, their incomes are going to be good. It's a faith-based product. And if you're buying a piece of their house, hey, why not do that? Make more American homeowners, Muslims homeowners. So after a lot of back and forth, it was done. People sometimes will ask me, you know, and I'll address that question right now. Yeah, but what happens? But if Freddie Mac is buying, isn't that money, you know, questionable to you? It's not, because if I'm selling halal meat, if I'm a butcher and I sell halal chicken, it doesn't matter who comes and buys my chicken. My chicken doesn't become haram because I'm selling it to a non-Muslim or I'm selling it to a Muslim brother, basically. Similarly, our product stays halal. You never deal with anybody, but at the end of the day, that reality, that early 2000s when Freddie Mac decides to buy Islamic financing, the growth of Islamic financing took off in a major way. Now we have the capacity to do about $1 billion a year because government says we'll buy American Muslims Islamic financing contracts. And if you have a question on this topic, I'll cover it again in the question and answer session. But I wanted to, that's a very big point in history. That's why I wanted to point that out to you. But the essence of Islamic financing really comes down to this. People ask me, what is the difference between Islamic financing and traditional lending? And I say the answer really is two things. One, it is the process. Second is the paperwork. Process, it cannot be buying and selling money. That's what banks do. When you go to get a loan from a bank, they're selling you money. Banks don't make products. They don't make computer, iPhones, tables, chairs. They don't do that. They take money from one party. When people go deposit money in the bank account, they take money from them, give them, let's say, 0.25% interest. They take this money, they turn around, and they sell it to somebody, home loan, car loan, auto loan, whatever the loan might be, at a higher rate. So they may be paying a depositor 0.25% rate. They're selling it for money for 4%, 5%, whatever. That difference between what the cost of capital is to the bank and what they sell it for, that is the bank's profit. It's called the interest spread. So banks are buying and selling money, and from a Sharia perspective, that becomes haram right away, because Islamically speaking, you cannot really buy and sell money. Money is not a product. So Islamic financing contracts, we have to figure out how can we get into a transaction where not money, but a product is a basis of the transaction. So the process is a product, there has to be a product involved. So in this case, it's a house. In our case, if we are doing home financing for you, we are buying the house together with you in a partnership. We both own the house together. And then you are buying our house, our share, over time. Okay? And you're paying us rent because you're using our share in the house. You're paying us rent to use our share in the house. So it becomes like a rent-to-own model. You can do this model with your current landlord. If you live in a house, and you go to your landlord and you say, listen, I don't want to go to a bank to get a loan, but I'm tired of paying rent to you. I don't want to pay rent anymore. So the landlord says, okay, fine, how about we do this? How about I give you 10 years to buy this house? You continue paying me rent, and the rent will go down over time as you buy me out, and then you buy it out. So there's no bank involved. You do a private deal with a landlord. It's a rent-to-own model, similar to what we are doing, except we buy the house with you immediately in a partnership. The Musharaka is called the partnership structure. We buy the house immediately in a partnership, and then you buy us out over time. So the process has to be very clear. What are you buying? It cannot be money. It has to be a product, whether it's a house, a car, could be gold, could be metals, could be whatever. It doesn't really matter, but it has to be trade-based. So in Surah Al-Baqarah, Allah subhanahu wa ta'ala says, they say trade is but a kind of riba, but we have made trade lawful and riba unlawful. This is the fundamental basis of Islamic financing. Every transaction has to be a buy-sell transaction of a product, not of money. So this is what distinguishes UIF Islamic financing versus a bank loan. Now, second thing, what it is, besides the process, it's the paperwork. With a bank, you sign a promissory note. Promissory note, basically you're saying, I'm promising to pay the money back to you with interest. and only you sign at the bottom saying, I promise to make that payment to the bank or whoever the case might be. A promissory note becomes a haram transaction because you're promising to pay money plus the interest. With us, we don't have a promissory note, we have a partnership agreement where both parties, you and us, we sign an agreement that we will come in to buy the house with you together, but then you will buy us out slowly over time. So it's a partnership contract that we sign, it's not a promissory note. So the process is different, the paperwork is different. So again, to summarize the main point here, money cannot be bought and sold. So if it's a transaction that is based on the bank paperwork, it becomes a loan, it becomes haram, you cannot buy and sell money. But products and services, that's fine. As long as a product is involved, you can do it. So Musharaka partnership, the way it works, very simply, I covered a little bit to go through this. Two partners, one is you as a customer, second is UIF. We both agree upfront, before even you go look for a house. Before even you go look for a house, you will contact us. So you will contact Ahmed before you go look for a house. Ahmed is going to talk to you. He's going to do some screening with you. He's going to understand your financial situation. How much down payment do you have? Do you have at least 3 to 5% down payment? Yes, I do. Great. How's your income? Can you prove me the income? Is it stable income? Last 2 years, you've changed 5 different jobs. That's a problem because there is no stability. You're changing jobs too many times. It does not make us feel comfortable. So you have down payment, you have income, and then we look at your credit score. If you pretty much have late payments and you have not paid anybody you made a deal with on time, that's a challenge too. So we look for 3 things, and I'll cover that a little bit more. But Ahmed will talk to you upfront and do a little bit of screening, and then he's going to say, okay, now you will become our agent. We both are partners, but you will become our agent, and now you will go look for a house yourself. So then you will go and you will look for a house as our agent as well, and you will go find a house. Once you find a house and you come back, then we will sign the Musharaka agreement, partnership agreement, to buy the house. So you will put down your capital, whatever the down payment is, whether you want to put, some people can qualify with 3% down. It's a low income program, but usually we require at least 5% down. Let's say you put 5% or 10% down, UIF puts rest of the money, and the home is purchased. Let's say in this example here, it's a $100,000 house. I'm going to use this example. On a $100,000 house, let's say you put 10,000 down. UIF puts 90,000 down. So in the beginning, you own 10% of the house. We own 90% of the house. If there are 10 rooms in the house, in theory, you typically own 1 room in the beginning. We own 9 rooms because we own 90% of the house. But our family is not moving into the house to live with you. It's your family is living in there. So, but you are using the other 9 rooms as well. So you're paying us rent for the 9 rooms that you don't own yet. At the same time, you are buying 1 room at a time from us. So as you make your monthly payment, 1 portion is the rent portion for the 9 rooms that is our share you're living in, and 1 portion is the buyout. You're buying us out. So as you buy the 2nd room, the rent goes down. Now you pay rent for 8 rooms. As you buy the 3rd room, you pay rent for 7 rooms. Like that, slowly, rent-to-own model, you continue buying us out. It's a partnership-based model. And then you start off with a 90-10 ownership, and then the monthly payment you're making to us, as I explained, 1 part is going to the rent portion, 1 part is the UIF share in the house, and eventually, once you've completely bought us out, our ownership is done in the house. Now the house becomes 100% yours. The one thing, before I get into the 5, what goes into buying a house, people ask me, brother, okay, if it's a house and it's a partnership, how are profits and losses shared? This partnership is based on a product where we both own the house together. It's a partnership. Our profit is the rent portion we're charging you. So we will tell you upfront, our profit is 3% on the 30-year contract because we want to be competitive with the banks. So our profit is a 3% we are charging profit rate on the rental amount. Your profit is the appreciation of the house. So if the house goes up in value from 100 to 150 to 200, we're not sharing in that. That is yours. Our profit is being made on the rent portion. Your profit is the appreciation of the house. Now, if it happens that home value comes down, well, over 15 years, 30 years, we're not looking to see home values coming up because over 15, 30 years, home value will be going up and down over the years. We're not checking every month, every year, what's happening to the home value. Doesn't matter to us. The problem happens is when you cannot make the monthly payment and you call us and you say, you know what, I lost a job, I have a health issue, whatever the case might be, I cannot make payments now. In that case, typically we try to work it out with you. We'll give you up to a year. There are government laws come into play as well. But we give you up to a year to get on your, get back, whether if it's a health issue or a job issue, whatever. We may stop the payments, we may lower the payments, whatever the case might be. Alhamdulillah, we have not had a single foreclosure because we try to work it out with our community members. So, but this is just how it's going to work if it were to happen. Now, even after a year, if you cannot make any payments, we say, brother, let's do this, let's sell the house. Let's sell the house because now we cannot wait any further. This is community money, we have investors to answer for. Let's sell the house. Let's say we started at a $100,000 house, you put 10,000, we put 90,000, but let's say after a few years, 80,000 is left. That's the balance on the house. And let's say out of the profit, 20,000 profit we had agreed to for 10 years, you already paid 5,000 profit. So 15,000 profit is still left for us. What we will say is, let's sell the house. We will forgive the future profit. So you can buy us out anytime you want. You only pay profit for the time you're living in the house. So we don't charge future profit. So future profit we'll forgive, but 80,000 is left over. Sell the house and give us back our $80,000. So let's say the home sells for 110, 120, whatever. You'll pay us the 80, rest, you keep it yourself. But if the home value has come down now from 100 when we bought the house with you, now it's down to $70,000. Because the area went through some problem. In this particular case, if you cannot make payments even after a year and the home value has come down, you have two options. Either you can walk away, we will take the house back, we will sell it. So that loss, that 10,000, we will take it. Banks will come after you if you have other assets, if you have other homes, or they can come after your wages. We will not, because our loss is on that property. We will take it, we will walk away, and that's how we end the relationship, basically. So that's a very important feature compared to a bank loan, that we will, if the home value has dropped down and you cannot make payments, we will forgive the capital that if any deficiency is there we don't collect, we will let it go as part of our agreement with you. So this is a little bit of a unique contract touch we have compared to a bank promissory note where you are required to pay that back regardless. Anyways, I just wanted to cover how profits and losses are shared so you know how that works upfront. Going into the 5 steps to buy a home, number 1 is going to be the pre-qualifying. I touched upon that. Brother Ahmed is the right person for that. He will take your information. He will give you a letter saying how much home you're qualified for. It's a very, very important step. You don't want to go waste your time, drive around, look for homes, come back, and then realize that you're not qualified because something on your credit is stopping you. There might be an old lien, an old judgment, or the down payment money you have is in cash, or whatever the case might be. There are issues that can suddenly, or income, you think you're making this level of income, but when we look at it, we say, well, not really, your income is not stable. So anything like that, we want to avoid upfront. So the first step is the key step, the pre-qualification. Once we have pre-qualified you, given you a letter, now you go look for a house yourself or with a realtor. We love working with Muslim realtors in the community. We do a lot of referral business back and forth. If you need a referral, Ahmed can also refer you to a realtor, inshallah, to help you who can be a right fit for you. So then you find a house. Once the home is, you find a house, the offer is accepted, you both buyer, seller agree, you contact us back again, step number 4, and at that time you have to give us your pay stub, your W-2, your tax return, your bank statements. We will collect all that information, and then we will get the file approved, and we'll close, and we'll get to the closing, and that's when you sign all the documents, you bring your down payment money, and we settle the transaction. Once you find the house, to the closing, it takes anywhere from 30 to 45 days, because we're very busy right now. A lot of people are buying homes, there's still some refinancing going on. Typically, we can also try to do the closings in 20 to 30 days, but currently we're not there right now because we are very busy with the amount of volume coming in. If you would come and ask me today, how soon can I, once I like the house, how soon can I close on the house? 30 days, if you're a pretty simple file, it's not complicated, but if it's a complicated file with self-employed, this, that, we might even need 45 days, but we can advise you closer to the time when you apply with us, inshallah. So what do we look for to buy a home? We look for 3 things. Income, this is the most important thing. Income and credit are two very important things. We can work with other things. Income, its rule of thumb is 1:5. If you can prove you make between you and your wife, maybe adult kids, household income, if you can typically prove 50,000 income, 5 times that. You can buy a home for up to 50,000. If you can prove 100,000, you can buy a home for up to 500,000. This depending that you don't have too many other debts and so forth. So this is a general rule of thumb. Don't hold me to it. Everybody's situation is very different, but rule of thumb is usually 1:5. In general, that's what you can qualify for. Credit cannot be bad. If your credit score is below 620, probably we cannot do the deal. But the better the credit, all of us have a credit score, if you have had a credit card or whatever, anywhere from 400 to 800. 740 and above is considered excellent. If you have that credit score, you get the best pricing, your file gets approved very quickly, a lot of good things happen. If it's 620 or below, we may not be able to help you. Anything between 620 and 740, we can do the deal, but in some cases you might have to say, listen, because your credit score is only 640, you might not qualify with 5% down payment, you might have to put 10% down payment. So we have to look at the file approval process like almost a stool with 3 legs. Income, credit, down payment. If one leg is weak, the other 2 have to be strong. So it's a combination factors we look at, inshallah, and we try to help you and advise you and guide you how best to qualify for homes and stuff. Down payment, there are also, we are familiar with some down payment program, assistance programs also if you qualify in the low income situation. Ahmed is very good at that. There are some grants available. We can find you money, government programs, $2,500 you get credit towards your down payment. Sellers sometimes can give you credit back. We can discuss and give you ideas how to do that. So because we know, been doing it for a while, we can advise you how best to streamline your home buying process, inshallah, and get the most out of the transaction. So this is a very hot market right now from a seller perspective. Inventory is very low. So some of the things I tell customers to keep in mind, tips when you're looking to buy a home in this market. Number 1, make a strong offer, get pre-approved for a higher amount. I don't know why, but some of our community members will come and tell me, I know I can qualify for $500,000 home, but just give me a letter for $300,000 because that's what I'm trying to make an offer for. So I don't want the seller to think that I have a lot of money. The seller doesn't care. Seller wants to sell the deal to the highest. You're not going to pay $500,000 for a house that is worth $300,000 just because you can make more of a payment. It doesn't work that way. But if you have a higher dollar amount letter, then a seller might be like, okay, I'm selling you the home for $300,000. He's qualified for $500,000, so chances are he's probably going to be able to get my deal done. So there is psychological advantage you have in getting a nice, strong pre-approval letter with a higher amount. Be flexible with sellers. Sometimes in this market, we are seeing inventory is very, very tight in some markets. Sometimes sellers need time to sell their house. So if you want to say, listen, once we buy the house, I can give you up to 30 days to move out, but let's close right now. So there are certain things you can do. There are some limitations with that about primary home versus rental home, etc. But there are some things we can talk to you and guide you how you can be flexible with sellers and do a rent back option to get that home you really want. Closing on time guarantee. If we have already pre-approved you and we know your file is strong, we can tell you, listen, you can do a 45-day commitment, and you can tell the seller, if it goes longer than that, I'm willing to pay you $100 a day penalty per file, if they're concerned about it. And if Ahmed and Umar already know that your file is pretty good and we'll get closed in 30 to 45 days, we don't have a problem telling you, I think you can go ahead and do that guarantee because as long as you don't lose a job or something doesn't happen, we can probably close that deal for you, inshallah. So there are certain things you can do. Use seller credit to pay for closing costs. Sellers can contribute towards closing costs to help you buy a home. You can use that to closing costs or to lower the rate and so forth. That's available. UIF usually has a purchase pricing special. Ahmed knows about that for purchases and so forth, and we can help you with that. Like I said, there are many different things available that we can guide you. Government down payment programs are there. But the most important thing is you have to cooperate with the financing company rep, the UIF rep like Ahmed, who can basically guide you, help you, and then we'll look at the closing dates with your sales contract, inshallah, and get the deal done. What is our promise to you, brothers and sisters? First, strict Sharia compliance. UIF stands for University Islamic Financial. Islam is in our name of the company. We take this very, very seriously. All programs are Sharia approved. The only thing we do is Islamic financing program. We're also the one company right now, we're trying to open a Islamic bank. So we can even take deposits. So we're actually working with the federal regulators and stuff, because the whole game has to change when you do an Islamic bank and what you can do and how we have to share the money. So we're working on that. So everything we do is always, first and foremost, has to be strict Sharia compliance. Low-cost provider, this is something we work very, very hard. Any company can tell you whatever they want, but we consider ourselves almost like a Southwest Airlines of the financing industry. Very transparent, we don't charge extra fees. Our biggest competitor in this is big in this market here, charges a monthly LLC fee that you are paying. Besides the monthly payment, they're collecting another $18.75 LLC per month to pad their profits. We don't do that. We cover that. We are a partnership-based program, but we don't pay. We pay that ourselves, so you don't have to pay for that. Very clear-cut transaction. Avoid and be the. I'm not saying we will be the lowest cost out there. That's not what I'm saying, because there might be other banks out there who might be cheaper, but we'll give you a very fair pricing structure, and we're going to basically handhold you throughout the process, so you get the best of everything, inshallah. You get a product that meets your peace of mind requirements, the Sharia requirements. You have a low price, it's competitive, and we also going to, people like Ahmed are going to handhold you, and Umar are going to handhold you through the process, so you know when you're dealing with third parties, title companies, real estate agents, attorneys, how to do it. And we're going to handhold you, be there for you. Lastly, we're very big on the technology space. Now people who are buying homes are the younger communities coming. Our first round of people were the people who came back in the 70s, 80s, 90s, we financed their homes. But now the younger generation is coming. Younger generation, the millennial community, the Gen Z, their expectations are very different than what maybe our seniors' expectations were. For them, it's all about click, click, click. They want to be able to quickly enter the application, upload their documents, get a quick answer. So we have spent over $5 million in technology already over the last couple of years. We're going to continue spending more. We want to streamline the process so we can do things faster, smoother, cheaply, so it benefits the company, inshallah. And for this reason, 6 years in a row, since this poll started, Islamic Finance News Magazine is a global publication. It is not, it's all over the world. They do a rating of voting, basically, who are the best Islamic financing companies in the world. First 5 years since the poll started, we were #1 in the US. Last year, they said we're going to do it worldwide. And there are players in Malaysia and Middle East, among every Islamic financing company out there, the entire world. UIF was ranked #1 Islamic financing company, real estate financier in 2020, basically. And we owe that really to our clients who really voted for us, and well-wishers who voted for us, because it takes a lot. People have to be happy. And also, I always joke about it, say competitors can talk a big game, they can talk a big game, but we let our customers do the talking. These are actual star reviews. If you go to our website, or you go to and Google it, based on, this is as of 9/14, just recently, a few days ago, 2 weeks ago, maybe less than that. These are our reviews. Most of the reviews are 5 stars. These are our customers who are voting for us. I don't know about you, but if I go to a restaurant, I always look at the star reviews, and I don't go to restaurants less than 4, and 5 is almost perfection. This is our star rating. Most of our offices are 5-star rated, alhamdulillah. And we make mistakes. We make a lot of mistakes, sometimes communication related, sometimes process related, but we try hard to correct, learn, do whatever it takes. But at the end of the day, our customers are very happy with us, as you can see. And inshallah, we hope that if you are thinking about Islamic financing, you give us the first shot, because inshallah, that should be the only shot you should take when you're working on Islamic financing. With that said, I'm going to stop right here. You're welcome to take a picture of that image. That is Ahmed Maroof. He's the brother back there I introduced you to already. He's the representative in your area. If you have any questions, comments, need a pre-qualification letter, reach out to him directly, inshallah, and he'll be happy to help you. And he's the one who invited me to come out here and do a presentation. So with that, I'm going to stop by saying Jazakallah khair. Thank you so much for taking your Saturday evening to spend some time with us. I'm over here with Q&A. Take Ahmed's card on the way out if you want, and then reach out to him. But I'll take any questions you have right now, inshallah, for the next 20 minutes or so. So with that, assalamu alaikum everybody again, and I'll go ahead with brother over there. I have just one rule about the Q&A. The one rule I have is I'm not going to come back to the same person for a second question until I've covered everybody with their first question, inshallah. So yes, brother, go ahead. If you can pull the mask down, it'll be really helpful to hear because I can hear you, inshallah. Yeah, sorry. Okay, this brother wants to know where we get the money from, which is always a very good question. So what I'm going to explain to you, I'm going to break it down for you how we raise capital. But before that, brother, what I want you to understand is the relationship let's say you want to work with us, the relationship we have is a buy-sell relationship. We are selling you a piece of the house that we own. So just by the definition of buying and selling, Islamically speaking, you worry about your own source of money, we worry about our source of money. Meaning, if you go buy a car today, do you ask the Toyota dealer, brother, where did you get the money from to keep the Toyota car on your lot? You don't, okay? If you tomorrow want to sell your car to somebody, John Smith walks in with a cowboy hat and he says, I want to buy your car, you're not going to ask him, brother John, where did you get the money from to buy my car? It's not important because on a buy-sell transaction, we are each responsible for our own source of money. We don't even ask you whether the monthly payments you will make to us, is that all halal? No, because you will answer to Allah subhanahu wa ta'ala yourself. So just because of the basis of a buy and sell transaction, that question should be less important to all of you. But having said that, let me explain how we raise the money. The initial capital, we have raised about 30 million from our investors, our company owners, and community members like you. We have a $30 million pool. We use that money to buy the house first. So that $90,000 is our capital that we use to buy the house first. Now, after we've bought the house and we own the house, we can sell that $90,000 portion to another investor. You do not deal with anybody else, but let's say we invested $90,000, we will sell it to another investor, Freddie Mac, Fannie Mae, or any private investor. You can be our investor also for $95,000. $95,000 comes back to us right away. $5,000 is our profit to run the business. But every month when you make payments to us, we will send it to whoever the investor is on the back end. You never deal with the investor. You only deal with UIF from start to finish. Contract does not change. So that answer is in 3 steps. 1, our relationship is buy-sell. 2, initial capital is our community money, which we use to buy first time. Later, we can sell these contracts to you, Freddie Mac, Bank of Kuwait, doesn't matter who. At the end of the day, the contract has to stay the same, and then you only deal with us going forward, inshallah. Brother, I'll take you, then I'll take that brother in the back over there. Go ahead. Sure.
Assalamu alaikum. I'm Jalil Shirzai. I live close to this place. So I have 3 questions. 3 questions, if you don't mind. So the first question I have is when you invest money, and let's say we pay 80,000 portion, and after 2 years or 1 year, I'm not able to make the rest of the money. Do I have to walk away, or the UIF is going to take participation and lost in the profit? And the second question I have is when you are charging the rent, is the rent going to be according to the market price rate, or is going to be something different? I think I forgot the third one, but if I remind, I will just let you know.
I can give you another minute to think about it if you want. No, you can. All right. So brother came with 3 questions, but you only remembered 2 after that. So jazakallah khair for that one. Maybe third was going to be very hard, so Allah Ta'ala probably had mercy on me and said, okay, let's give him only 2 right now, inshallah. Okay, so first question brother asked about more about if he loses a job or something, what happens if you cannot make payments. So this partnership model, I want to go one step to educate the community. It's a very, very important point. In Islam partnership, there are 2 types of partnership models: Shirakat al-Milk, Shirakat al-Aqd. Shirakat al-Aqd is a business partnership. So let's say if you and I decide to buy a business together, gas station or grocery store, or a rental property also. That profits and losses will be shared because it's a business based on the investment we have in the property. So if we both put $50,000 to buy a $100,000 business, we will share profits 50-50, loss 50-50, whatever the case might be. Shirakat al-Milk is an asset-based partnership. The house is not a business for you. You're living in the house. If a farmer buys a tractor, to use a tractor on his farm, tractor is not a business for him. That's a piece of machinery he wants to own. Asset partnerships, Shirakatul Milk, are different than business partnership. In an asset partnership, both parties decide upfront how we are going to make, how profits, losses are going to work. As I explained to you, the profit, our profit is the rent portion. Bank profit is the interest. Bank is making money, UIF is making money. We're not saying we're not making money. But our profit is done in a halal way, so our rent portion, that if we decide today our rent portion will be factored around, I'm using an example, this changes all the time. Right now we are charging about a 3% to 3.125, that range profit rate for 30-year program. We're not concerned about what the rents are in the market. We are more concerned of what the bank is charging our customers. If you came to us and I tell you our monthly payment is $1,000 based on the 3% profit rate, 30-year, you will not go to a rental apartment and compare the rent for $1,250 there. You will probably, if you're looking to buy a house, you will call a regular bank. And if that bank is also $1,000, we are competitive with them. So our rent monthly payment, which is composed of the rent and the UIF buyout, that we are trying to match with what the banks are charging, so we are competitive with them. So it is possible that you come to us and we tell you your monthly payment is $1,000, but the same house, the rent might be $1,250. But we don't care about that. What we are caring is our customers are going to compare us to banks, their financing, so we want to be competitive with them. So our rent is based on what the banks would charge the monthly payment. So we want to be competitive. That's the first question. Second question you asked about if you, what was the second question? I'm sorry, I forgot. Man, I'm good, I gotta be I'm becoming very good doing this for so many years, mashallah. So I can cover both in one second, alhamdulillah. Okay, let me take you, then I'll come to you, okay. No, I'll take you. Sit down. No, this is a remote, just sit down, please. You are more important than the remote control here. Go ahead, what's the question? Okay. Okay. Yes. 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 So brother's question is, in the beginning, the example I gave, you said that you own the home 90%, I own the home 10% because you put 10% down, I put 90. He's saying the $1,000 monthly payment you give, is that including the 3%? Yes, it is. So the monthly payment we give you is including our profit also. So the monthly payment is the rent portion plus the UIF portion. Just like a bank, principal and interest. Bank will charge you principal plus interest in the monthly payment. Just like that with us, we charge the acquisition and the profit portion together, inshallah. I have this brother, yes? And then, oh, so your brother, hold on. I hear his hands first. Go ahead, brother. Ask your question. Yes. Correct. Yes. It's not 3 transactions. I don't want to, it's a technical, there's a technicality over there. I want to be very clear. It is a rent-to-own model. It's only 1 transaction because it's your monthly payment is rent and buying us out. There is no 3 transactions. It's just 1 transaction. That's it. It's a rent-to-own model. Okay. 1 contract. 1 contract. See, the first agreement, we agree to buy a house, that is the intention. Our intention is that we are not going to get a loan like a bank. Our intention is we're going to buy the house together. That's more of an intention. The other 2 things are part of the contract, basically, that you are going to be doing a rent-to-own structure with us, inshallah. That's how that works. I'll come here, then I'll come back to that brother. Okay, go ahead. Go ahead. I'm sorry? If you can take the, please, that'll help me out, yeah. Uh-huh. Yes. Okay. Yes. So, yeah, it's a very good question. Yeah. Yeah. So the brother's question is, how do you add the profit to the contract, basically? So, brother, it's very simple. If the home is $100,000, I'm giving you a simple example. We will tell you, if our share is $100,000, we will say, if you want to do a 10-year contract with us, 10-year contract today, I'm making example. 10-year contract today with us is 2.5% profit rate. At 2.5% profit rate, $100,000 over 10 years will be $20,000. So we will give you a schedule that you will, if you take 10 years to pay it, you will pay us $100,000, which is our investment in the house, plus the 20,000 profit. So you will pay us $120,000, $1,000 monthly payments over the next 10 years. So 120 payments, $1,000 a month, you'll end up paying $120,000 over the next. So every month when you make a payment, part of the money goes to $100,000, which is our share to buy. Part of the money goes to the 20,000 profit bucket. And each month, the profit keeps going down and you will buy us out. So profit is added upfront on day one. Profit is added to the what we give to the house, and you know right away how much is the total payment you're going to make over the next 10 years and so forth. One more question and we wrap it up? Okay. Okay, I'm going to take two questions and I'll wrap it up, inshallah. I'm going to try to go quickly because, okay. Brother, I'm going to go ahead with you over here and then I'll come back to this. Yeah, I'll come back to you, inshallah, yeah. Yeah. 95,000, I just example, yeah. Mm-hmm. Yeah. Yeah, it's not a choice for the other company. The other company already will know it is an Islamic contract. So right now, if Freddie Mac or Fannie Mae government entities, they are looking to buy our contract, brother, if you can hold off the, I'm sorry, brother, if you can just, let me finish up here, inshallah. Sorry, yeah, because it's getting loud over here. Every question is very, very good question, mashallah. We will not get an investor, brother, who is not willing to accept the terms. I have been talking to 50 plus investors over the last 5 years to find other investors to work with us. If they don't like our contract, we will not work with them. So they have to like our Islamic finance contract and agree to the terms, because you're not signing any new paperwork with anybody. Once you sign with us, khalas, it's over. So we will not bring any investor who's not agreeing to the Islamic financing terms. If they don't agree, they don't have to be our partner to begin with, basically. So that's one thing. I'm going to go very fast. Okay. Omar, what's the, is it Isha? Wait, what time is it? I'm sorry. Okay. Let me take two more very quickly, inshallah, and we'll wrap it up, inshallah. Yes, brother. Go ahead. And I'm coming, brother. I'm coming back to you. Don't worry, inshallah. Go ahead. No, you're not. No. You are dealing. No. You are making a payment to UIF, but you send the money to Midwest Group. Right. No. Midwest is our. Yeah, let me explain to you. In America, every company has to have a billing company because government doesn't want us to take people's money and run away. So every company has to have a billing services company that collects the money. Midwest is actually our sister company. It's a billing company. That billing company can be a billing company in US or in India, wherever, but they have to be a legitimate billing company. So Midwest is our sister company, but if you write a check, you will write a check to UIF. You'll mail it to Midwest because they are the ones who will be collecting the money, and then they send the money to the investor, to the tax people, to the insurance people. But your contract with US, if something happens, we have to still be involved. UIF is still going to be involved. Midwest is not going to be dealing. They only collect monthly payments. They send it out. But UIF will still be involved throughout the length of the contract. That's how it works. Yeah. Okay. Because it's nothing to do with Islamic or not Islamic. What it has to do is real estate contracts are amortized, meaning if you do a 30-year contract in the beginning, 90% goes towards the profit, 10% goes towards the acquisition. On a 10-year, it becomes opposite. On a 10-year, 90% goes towards acquisition. Why? The lesser term you go, the more goes towards the acquisition less to profit. These are how contracts are structured. It has nothing to do with Islamic or un-Islamic. It has to do because on a 30-year contract, most people will buy or sell the home in 7 years or 10 years. If you distribute equal portions for the next 30 years, companies cannot be profitable. So what we have to do is every real estate contract, whether it's a bank or UIF, they are amortized. The calculator is an amortization calculator. That is why it is done like that. And this is something you know upfront. It's not like we pull it off on you. You know upfront, this is how the money is going to be distributed. If you don't like the structure, you don't have to go with it. Last question, I'm going to wrap it up, inshallah. After that, I know we're getting late over here. Yes? Yeah. No, the question is when you make monthly payments, when the partnership share is changing, do the payment changes? No. Payment is fixed for the length of the contract, whether it's 10-year, 15-year, 30-year. Inside the payment, the amount of money going towards acquisition or profit keeps changing over time. Because if the payment keeps going down, then the 30-year will always stay there. So payment will be fixed for the next 30 years, 15 years, but within the payment, how much is going to rent, how much keep changing. Let me stop right here. After Isha, inshallah, they'll be here. We can take some more questions. Jazakallah khair. Thank you. Assalamu alaikum, everybody. And sorry I took a little bit longer, but the good questions coming, inshallah.
الله أكبر الله أكبر الله أكبر الله أكبر أشهد أن لا إله إلا الله أشهد أن لا إله إلا الله أشهد أن محمدًا رسول الله أشهد أن محمدًا رسول الله حي على الصلاة حي على الصلاة حي على الفلاح حي على الفلاح الله أكبر الله أكبر